Hello and welcome to Unacademy, India's largest online learning platform, which gives you a world of courses, resources, content, live and recorded sessions of your favorite educators on your favorite topic in order to accelerate and improve your preparation for the CA final and intermediate examinations. Crack CA exams with us is a vertical of Unacademy that caters to the students of CA Foundation, CA Intermediate, and the CA Final examination in their pursuit and journey of the preparation for the CA Foundation, CA Intermediate, and CA Final exam, and aims to give you top educators, quality content, and overall a great learning experience. So come, let's crack CA exams with Unacademy, India's largest online learning platform. Welcome to the session today. Before we start the session today, a little about the educator, that's me. Hello, I'm Prathik Gupta. I'm a Bachelor of Commerce from Christ College, Bangalore University. I'm also an associate member of the Institute of Chartered Accountants of India, an associate member of the Institute of Cost Accountants of India, and an associate member of the Institute of Company Secretaries of India. I'm also a law graduate from Karnataka State Law University and currently a practicing chartered accountant. I'm also a visiting faculty for CA subjects and an educator for CA students both offline and online. Prior to starting my practice, I worked with S.R. Bartley Boy & Associates, that's the Indian member firm of Ernst & Young Global, in the Audit and Assurance Department, and Ernst & Young India, that is E&Y India, in the Mergers and Acquisitions Department. I also worked with the Manipal Group Bangalore as the corporate controller of their Indian entity and their German subsidiary located in Frankfurt, Germany. And after I got back from Frankfurt, Germany is when I decided to start on my own. And here I am today having this opportunity to address a group of you fine, young and enthusiastic CA aspirants. So please welcome to my session, and anytime during my session, in case you have any questions, any queries, any discussions to be made about the relevant topic, please feel free to drop in a message and I will be happy to reply it as soon as I can. All right, and also I would like to tell you that on the Unacademy platform, I have taken various sessions on called special classes on the Unacademy platform, which I suggest and encourage each one of you to go and have a look at, because that will help you in your preparation for the CA exams. And so there are, if you go to the Unacademy app and you type in Prathik Gupta, Prathik Gupta, you will get a list of my sessions called special classes that have been taken there. And once you go through them, you have the opportunity and the facility to ask me any question and queries then and there, and I will be happy to answer it. Along with this, also I have taken various sessions on the YouTube channel of Unacademy. So you need to go to YouTube and type in Prathik Gupta, Prathik Gupta, and you get another list of all the sessions that are taken by me on the YouTube channel as well, which will help you in your preparation for your examinations for the CA Foundation and the CA Intermediate. So I request you to go through these sessions, go through the YouTube channel of Unacademy and also the special classes on the Unacademy app, which I will tell you about a little further, and take advantage of it, and also feel free to give me a feedback and ask your queries if any. All right, so like I said again, even during any part of the session today, in case you have any questions, please feel free to ask me and I will be happy to answer you. Let's proceed. Now, Unacademy has three platforms. For first is the free platform on YouTube, which we are attending today, which also gives you various sessions and useful information to help you in preparation of your examination. The second platform that Unacademy has is through special classes on the Unacademy app, where again a lot of topics of your interest and importance are discussed, and matters are discussed to help you in your preparation for the CA final and intermediate examination. And above all, it has another platform called the Plus platform, which is a payment-based subscription model which gives you various advantages and enhances and accelerates your preparation for the CA Foundation and intermediate examination. The various advantages provided by the Plus platform of Unacademy are as follows. Now, what do you get if you enroll to the Plus platform of Unacademy? More about the packages and the subscription cost will be told to you in the following slides. But what do you get when you subscribe to the Plus platform? First and foremost, you get daily live classes where you get to choose your educator, your topic, chat with your educator, engage in discussions, ask your doubts and answer polls, all this while the class is going on. Yes, you heard it right. All this while the class is going on. You do not need to wait for another session, another day, end of the session, or maybe after some time to ask your queries and doubts. You can do it then and there. in real-time basis. It's as easy as lifting your hand up in a real classroom and asking your query, and the educator will be happy to answer your queries, discuss the matter with you, and answer your polls. All this on real-time basis while the class is going on. All right, so I encourage you to take advantage of this opportunity. And the second reason why the Plus platform is highly recommended and encouraged is it conducts various live tests and quizzes which help you evaluate your performance or preparation for the examination. Please remember, as we keep preparing, it's always important for us to keep having regular tests and quizzes at regular intervals to know the level of preparation that we've done and also to evaluate our performance. So the Plus platform of Unacademy also conducts mock tests and quizzes at regular intervals which help you in an analysis of your performance. So what happens with this analysis? You get to know your weak areas, your strong areas, and not so strong areas, and helps you bifurcate your time based on the division of these three areas, so that you spend a maximum time on your weak areas, a little lesser time than that on your not so strong areas, and less time on your strong areas, so that eventually your weak areas and your not so strong areas also in turn become your strong areas. So what these live tests and quizzes at regular intervals help you to do is it helps you to identify your level of preparation as to which area requires more preparation, which area is already prepared. So then you can channelize your time accordingly to the areas that require more time. So that is how this helps you. This helps you in channelizing your time. Okay, the third reason why the Plus platform of Unacademy is highly recommended is because the courses provided by the Unacademy Plus platform of Unacademy are structured courses. They are structured courses because all the courses are structured in line with your exam syllabus to help you best prepare for it. So in the Plus platform of Unacademy, all the courses that are there are prepared keeping in mind your exam syllabus, so that by the time you finish that particular Plus course, you can be sure that you've completed the entire syllabus of your examination without missing out on any important or major topic. Alright, so that care is taken in all the courses of the Plus platform, that by the time you finish this, your syllabus also is done. And lastly and most importantly, the one subscription to the Plus platform of Unacademy gives you access to all the live and recorded courses to watch from the comfort of any of your devices. So what happens here? Once you subscribe to the Plus platform, the one subscription will give you access to all the live and recorded courses present on the Unacademy platform of your favorite educator or your favorite topic or the topic you require help on most. And all this is available at the comfort of your devices, whether it is a desktop, whether it's a laptop, whether it is a mobile phone or a tablet. All this can be viewed on any of these devices. And the best part is, at whatever location and whatever time you want. You do not really need to be in your study room to access this information, or you do not need to be in your office to do this. You can do it while you're commuting from office to home. You are in a taxi, you are in a bus, and you want to maximize your time. You can put on your headphones, connect it to the mobile phone, and access all your live and recorded courses from there while you're on the go. And traffic being the problem now in India, I think you can utilize that time when you're in a cab or a taxi to make your preparations more robust and more dedicated. So this is how the Plus platform will help you in your preparation for the CA Foundation and Intermediate examination, where you get daily live classes, you get live tests and quizzes which help you evaluate your performance, you get structured courses which are in line with the syllabus of your examination, and most importantly, you get unlimited access to all the live and recorded sessions of your favorite educators, your favorite topics, on the device of your choice, and also at the time and location of your choice. There is no restriction on that, or there is no timing restrictions that you have. So I sincerely hope you take advantage of the Plus platform of Unacademy, which is a payment-based subscription model. More information about this platform will follow in the coming slides. All right. Now, for those of you who have not downloaded the Unacademy Learning app, I request you to go to your Play Store and download the Unacademy Learning app. You will get a screen where you need to enter your mobile number. You will get an OTP. Please register on the Unacademy Learning app using the OTP. It's as simple as this. And once you do that, what happens once you register on the Unacademy Learning app? Once you register on the Unacademy Learning app, you get your gateway opens to the world of courses, resources, content, live and recorded sessions that Unacademy has to provide to you in the form of special classes, as well as the Plus platform in case you have subscribed for the Plus platform. And then what happens is you can carry all this, the courses, resources, content, live and recorded sessions of Unacademy in your pocket through your mobile phone and access it whenever you want, wherever you want, whether you're on a holiday and you have some time, free time, or whether you are waiting for someone at a coffee shop or you're waiting for someone for a meeting. You can utilize that time to pull out your mobile phone, put in your headphones, and then access all the information that you want. And please remember, for a course like CA Foundation and CA Intermediate and CA Final, you do require to dedicate and make use of whatever little time you get for your preparations, because time is the only thing that is lacking while you are doing your CA preparations. So this Unacademy Learning app will help you utilize your time in hand to the maximum extent possible by minimizing the wastage of time to the maximum extent possible. So I really hope and recommend you to please download the Unacademy Learning app from the Play Store of your mobile and register on it using the OTP that will be sent to your mobile phone. And for those of you who have already downloaded the Unacademy Learning app and are using it, I thank you very much for your support, and I request for your support in the future as well. And while downloading and installing, in case you have any queries, you can always chat with Unacademy on the following link. All right, so once again, please do download the Unacademy Learning app from the Play Store of your mobile phones and register on it using your mobile number and OTP, and make the most of this opportunity to give your preparation for the CA Foundation and Intermediate examination and undisturbed continuance. All right, thank you so much, and I look forward to seeing you on the Unacademy Learning app very soon. Like I told you, the Plus platform of Unacademy is a payment-based subscription model which provides you various subscription packages for the various courses. I'm part of the CA Foundation and Intermediate subscription. So the various packages provided for the CA Foundation and Intermediate subscription under the Plus platform of Unacademy are as follows. The packages provided are for 1 month, 3 months, 6 months, 12 months, and 24 months. The one month package costs you normally rupees 3,500. The 6 month package costs you rupees 8,750. The 3 months package costs you rupees 8,750. Then you have, just 1 second. Okay, and then the 6 month package costs you rupees 14,000. The 12 month package costs you rupees 17,500, and the 24 months package costs you rupees 21,000. Please do not forget, while you're choosing the subscription of your choice, please do not forget to use the code Prathik, Prathik, to get a discount of 10% on your listed price immediately. I repeat, Prathik, Prathik. That's my name, to get a discount of 10% on the listed price. So the after discount price of the various packages for the CA Foundation and Intermediate subscription under the Plus platform of Unacademy are as follows. The 1 month package will cost you rupees 3,150. The 3 months package will cost you rupees 7,875. The 6 month package will cost you rupees 12,600. The 12 month package will cost you rupees 15,750, and the 24 months package will cost you rupees 18,900. So you see immediately there is a discount or a saving of 10% when you've used my code Prathik, Prathik, and you get a discount of 10%. While you're free to choose the package of your choice, either 1 month, 3 months, 6 months, 12 months, or 24 months, I personally would recommend you to go for the 12-month package or the 24 months package. Now, this is due to the following reasons. Firstly, it is cost effective. If you look at the per month cost of the 1 month package and you compare it with the per month cost of the 12 months and 24 months package, you will observe that it's almost less than 1/3 of the 1 month cost. Okay, you have the per month cost in the 12 month package is rupees 1,313, and the 24 months package, it further goes down to rupees 788. So there is major savings that you're making here immediately. And secondly, and most importantly, if you notice, the CA Foundation and the Intermediate subscription is being provided to you under one plan or one subscription. Okay, so normally it takes you about a year's time to prepare for the foundation and the intermediate examination of the CA exams, a CA course. So it makes sense for you to at least start off with a 12 months course, because if you're getting it at a cost effective price and also covering the entire duration of your CA foundation and intermediate course, then it makes sense for you to go for at least 12 months because it gives you heavy savings. The 1 month, the 12 month cost is rupees 15,750, whereas the 1 month cost is just 3150. So already it's a lot of savings, and the per month cost comes down to almost 1/3 of the 1 month cost of rupees 3150. So if you're getting the CA foundation and the intermediate package at one cost, one subscription cost, it makes sense for you to go for at least 12 months to start off with. But having said this, you are free to go for whatever package you choose. That means a 1 month, 3 months, 6 months, 12 months or 24 months. And while doing so, please do not forget to use the code Prathik, Prathik, to get a discount of 10% on your listed price. There is a no cost EMI option available also for 6 months, 12 months and 24 months package. Just in case you do not want to pay the whole amount at one shot and you need time, then you can avail the opportunity of a no cost EMI for 6 months, 12 months and 24 months subscription package. Alright, please take about a minute and go through this slide and then we proceed with the session. The Plus platform is highly recommended to you because it helps you accelerate and enhance your preparation for the CA Foundation and the Intermediate course. Okay, now we come to today's topic and today's session. Please excuse my straight lines. Yes, that's the straightest I can draw it using a pen tab. Alright, so today's session that we're going to discuss today on YouTube is the Negotiable Instruments Act 1881, which will be useful for the CA students of the CA Foundation and the CA Intermediate examinations. And also for the various other examinations, and generally if people want to know about what negotiable instruments are, because this is something that is dealt with by every person in their day-to-day life. Whether you know it or you do not know it, a negotiable instrument is dealt with by a normal person who carries on business on a day-to-day basis, right? So even though this chapter is there in in the CA course, but its applicability, I feel, is to the maximum people who conduct business or who conduct any commercial transactions or who have done it anytime in their life. So it's very important for you to know your rights and obligations and duties under the Negotiable Instruments Act 1881. So I welcome you all to the session today on Negotiable Instruments Act 1881, and during the session, in case you have any questions or queries, please feel free to ask me. And I repeat, please do not also forget to attend all my special classes on the Unacademy learning app that I told you a little while earlier. You can download the app and type in Prathik Gupta, Prathik Gupta, and there are a number of special classes that are taken there to help you in your CA Foundation and Intermediate examinations. So I request you to download the app, download the Unacademy learning app, go to my profile Prathik Gupta, and enjoy and benefit from the various special classes that I have taken. I've taken a lot of sessions on YouTube as well. So you can look me up on YouTube by the name Prathik Gupta, Prathik, and make the most of all the sessions. So I really look forward and hope to see you there. Let's start off with today's session. And any questions during any part of the session, please ask me and I will be happy to answer you. So we are talking about Negotiable Instruments Act 1881. Let's start with a brief introduction about what you mean by Negotiable Instruments Act. The law relating to negotiable instruments is the law of the commercial world, which was enacted to facilitate the activities in trade and commerce, making provision of giving sanctity to the instruments of credit, which could be deemed to be convertible into money and easily passable from one person to the other. In the absence of such instruments, the trade and commerce activities are likely to be adversely affected, as it was not practicable for the trading community to carry on with it in the bulk of currency in force. The source of Indian law relating to instruments is admittedly the English common law. The main objective of the Act is to legalize the system in which the instruments contemplated by it could pass from hand to hand by negotiation like any other goods. So let's discuss the introduction of the Negotiable Instruments Act. Now, like the definition goes, please remember, trade and commerce has been happening from time immemorial. It's been happening since the time even before we knew about it. Earlier, it used to happen as barter. Then there was some currency system that came into picture, and then the currency system was used for trade and commerce. Earlier, we used to use trade and commerce only in our local area, but slowly the geographical area and the applicability also increased to a lot of other areas. So, as and when the trade and commerce increased, the need for credit-based facilities also increased, as it was not, after a certain point, it was not practical to carry on the trade by having the currency or the money in your pocket or on cash basis. So the credit basis of trade and commerce had to come into force because of the expansion or the explosion in the trade and commerce taking place. All right, so earlier when there was a small amount of transactions and everything, then a barter system or a cash system where you immediately buy or sell things on cash, purely cash, was possible. But as and when the requirements, the demand grew and the trade and commerce scope grew, then in that case the need for credit in case of currency was always required. Now, due to this, there was the need of the Negotiable Instruments Act, which has to come into the picture because it contains the various negotiable instruments which give you as a facility of credit to be used in case you are not following the cash system of trade and commerce. Now, what are the various instruments that are given under the Negotiable Instruments Act? We will discuss further in the slides. And also, please remember, the source of the Negotiable Instrument Act or Indian law relating to such instruments is admittedly from the English common law. It has been inspired from the English common law. The main objective of the Negotiable Instrument Act is to legalize the system by which instruments contemplated by it could pass on from hand to hand by negotiation like any other goods. So it simply means whatever negotiable instrument you have, how does the terms and provisions based on which it passes from one hand to another hand by negotiation like goods can be administered and monitored or can be managed. Okay, so all those negotiable instruments which are used in trade and commerce will come under the Negotiable Instruments Act 1881. All right, please take about 30 seconds, go through the introduction, and then we proceed. Please ask me any questions you may have. Okay, now the recent developments. Let's talk about the recent developments under the Negotiable Instruments Act. The Act was amended several times. Recently, 3 amendments were made in the Negotiable Instrument Act. NI Act means the Negotiable Instruments Act. Amendment and Miscellaneous Provisions Act 2002 and the Negotiable Instruments Amendment Act 2015 and the Negotiable Instruments Amendment Act 2018. Alright, so these were the 3 amendments that were made to the Negotiable Instruments Act 1881. If you see the date, 1881 was quite a while back, and after that a lot of things have changed. So there were recently 3 amendments. Those amendments were contained in the Negotiable Instruments Amendment and Miscellaneous Provisions Act 2002, the Negotiable Instruments Amendment Act 2015 and the Negotiable Instruments Amendment Act 2018. The Negotiable Instruments Amendment Act 2018 received the assent of the President of India and was notified in the Official Gazette on 2nd August 2018 and came into effect from September 1, 2018. The Amendment Act 2018 contains 2 significant changes, that is the introduction of section 143A and 148. These sections provide certain interim compensation during the pendency of criminal complaint and the criminal appeal. So like I told you earlier, the Negotiable Instruments Act was originally in 1881, so it was quite old, and today we are in 2020, so it required some changes. So there were 3 amendments that happened in the Negotiable Instruments Act. The first amendment happened with the Negotiable Instruments Amendment and Miscellaneous Provision Act 2002. The second amendment happened with the Negotiable Instruments Amendment Act 2015, and the latest amendment happened with the Negotiable Instruments Amendment Act 2018. Now with this, the latest amendment, that is the Negotiable Instruments Amendment Act 2018 received the assent of the President and was notified in the official gazette on 2nd August 2018 and came into effect from September 1, 2018. Now, the main amendment that took place in the Negotiable Instruments Act 1881 through the latest amendment of the Negotiable Instruments Act, Amendments Act 2018, was that two sections, Section 143A and Section 148, were introduced into the Negotiable Instruments Act 1881, and these sections provide interim compensation during the pendency of a criminal complaint and criminal appeal. Now, these are basically when a person issues a negotiable instrument to someone and the negotiable instrument is not honored. In that case, the person who has got the negotiable instrument can initiate legal proceedings against the person who has issued the negotiable instruments. So this gave a lot of power and a lot of strength to the Negotiable Instruments Act 1881 to bring it in force with the latest situation. All right, please take about 30 seconds, go through this, and then we proceed. Okay, now let's start off. Now let's look at another important topic. What is the meaning of negotiable instruments? Okay, negotiable instruments is an instrument. The word instrument means a document. So please remember, instrument means a document here. It's not exactly a physical or a metallic instrument or a wooden instrument. It's a document which is freely transferable by customs of trade from one person to another by mere delivery or by endorsement and delivery. The property in such instrument passes to a bona fide transferee for value. Now, like the initial paragraph about Negotiable Instruments Act says that, just one second. Okay, a negotiable instrument is an instrument. That means it's a document which is freely transferable. So a negotiable instrument is a piece of document that can be transferred from one person to another. The rules regarding the transfer are by customs of trade. That means over the years, however the trade has evolved and whatever practices in that trade has evolved, according to those trade practices, it is transferable from one person to another by mere delivery. Okay, so mere delivery simply means the document could be handed over by A to B and the delivery is done. All right, or it could be done by when the instrument by endorsement. The second part of the definition says endorsement, or by endorsement and delivery. Endorsement means if a person like A has transferred a negotiable instrument to B, so B could also endorse it. All right, and that means give his approval and sanction and deliver it further to C. The same instrument that was issued by A to B, B will not encash it or utilize it, but he can endorse it and deliver it to C, so that in case he had certain dues to C, that will be done by the same negotiable instrument that was issued by A. He will not have to issue another negotiable instrument to C. Now, all right, now that I can explain it with an example, I will explain it to you. The Act does not define the negotiable instruments. Okay, so the Negotiable Instrument Act does not define or give you the inclusive or exhaustive definition of negotiable instrument, but it gives you just an explanation of what exactly do you mean by negotiable instruments, and any document which has the characteristics of a negotiable instrument, even though it's not mentioned in this chapter, will become a negotiable instrument and will be governed by the Negotiable Instruments Act 1881, more of which we will discuss as we move ahead. So, however, Section 13 of the Negotiable Instruments Act provides for only three kinds of negotiable instruments, that is bills of exchange, promissory notes and checks. Okay, payable either to order or to the bearer. Now, I'm sure all of us listening to the session today have at least heard of the term checks, if not bills of exchange and promissory notes. Checks is something that we deal on a daily basis. All right, when we need to make payments, when we need to receive our payments from our customers, they issue us a check, then we go and deposit it into our banks and the money comes into our bank, right? But with the recent growth of internet banking and mobile banking, the usage of checks is coming down, but still there are a lot of business houses, a lot of trades that only work with the help of checks and they do not accept anything else. Okay, so we will discuss the three negotiable instruments that are exclusively given under the Negotiable Instruments Act, that is a bill of exchange, the promissory note, and checks. As to what are the rights and obligations under each of these, what are the characteristics of each of these, we will discuss as we go on. And please remember, all these instruments, that is the bill of exchange, promissory note, and checks, are payable either to order or to the bearer. That means either it is you write someone's name on it and it is paid only to them whose name is there. So you order the bank to pay it to them, or the bearer. Bearer means who holds these instruments. So either ways you can use these negotiable instruments in your payments, which we will talk about further. Now let's talk to, I told you that I will give you an example, right? Now let's say A issues. I'm giving you an example of by mere delivery or endorsement. Let's say A issues check to B. Okay, now this is delivery. Okay, where A has issued a check to B for rupees 500 and B can go and encash the check in the bank. Delivery. Now let's talk about endorsement and delivery. Now let's say A issues a check to B. Okay, now B has to pay C. Now here B has two choices. Either he takes the check from A and cashes it, gets the money 500 rupees in his bank, and then he gives a check to C. Or to make things simpler, he could simply endorse the check that A gave him. So A gives B a check. B can endorse the same check to C for rupees 500 by giving his approval on the check. So when C presents the check directly, C gets the money. So in this, the middle link of B having to clear the check given by A is taken care of, and the endorsement and delivery method of Negotiable Instruments Act is taken care of. Alright, but please remember, this is not normally done. This is not a very normal practice, but this provision is present in the Negotiable Instruments Act, where it is transferable from one person by mere delivery or by endorsement and delivery. Alright, so the types of negotiable instruments that we're going to discuss under the Negotiable Instruments Act 1881 are a promissory note, a bill of exchange, and a check. We are going to discuss details of each of these in detail in the future slides. I request you to take about a minute, go through the slide, and then we proceed. Any questions at any point in time, please ask me. Okay, now let's talk about essential characteristics of negotiable instruments generally. Okay, now these are the essential characteristics of all negotiable instruments. That is, it could be your bill of exchange, a promissory note, or a check, or any other instrument which creates the rights and obligations of negotiable instruments not mentioned in this chapter. First and foremost, the negotiable instrument should be in writing. It is necessary in writing. There cannot be any negotiable instrument which is oral. Now, earlier in times, things used to work on trust, where a person says, okay, I owe you this much money, I will give it to you on so and so date, and that was acceptable. But please remember, as and when the trade and customs have increased, the usage has increased, the demand has increased, the population has increased, the matter of trust in terms of business relationship, where only oral transactions were set, has come down drastically. So for any negotiable instrument to have a legal enforceability or to create a legal obligations for the giver and the receiver of the negotiable instrument, it has to be in writing. So a negotiable instrument cannot be oral. Written is mandatory. All right, so you cannot have a negotiable instrument which is anything other than written. It has to be in writing, oral or trust mutual negotiable instruments are not allowed and not permissible. Second and foremost, it should be signed. The person issuing the negotiable instruments should sign or give his authenticity or approval on the negotiable instruments. Only then does it make him legally accountable and legally enforceable in the court of law. So it has to be signed. By the issuer of the negotiable instruments, and only then it is a valid instrument. Any negotiable instrument which is not signed is not valid. Okay, it should be freely transferable. It should freely transferable from one person to the other. That means one person can deliver it merely by handing over to the other, and the other one can endorse it and deliver it to any other person he wants. So it is freely transferable. There is no restrictions, and that is the most unique feature of a negotiable instrument, that it is freely transferable from one person to another, and it makes the work or trade on a credit basis more useful and increases your scope of doing business. So it is freely transferable from one person to another on delivery and or endorsement and delivery. Okay, holder's title. Then the next characteristic of a negotiable instrument is holder's title is free from defects. That means whoever is the holder of the negotiable instrument is free from defects. That means he has obtained the negotiable instrument from the rightful issuer of the negotiable instruments and not maybe stolen it or got a bad title to it. So please remember, I have taken this session on Sale of Goods Act also, that the title of goods passes from one person to the other bona fide when the person to whom the goods are transferred obtains the goods in good faith and not using any ulterior or malpractices. The same applies to a negotiable instrument also. As a negotiable instrument is transferable from one person to another, it is very important that the person who is a holder of the negotiable instrument should obtain it through bona fide and authentic means. That means the issuer should have given it to him, and he should not have obtained it through any other means. There is an example to this. Now all of us, I'm sure all of us have encountered a check sometime or the later. Either we've received a check from someone or we've paid a check to someone. And please remember, there is a option to cross the check. That is an account pay. Correct? All of us have done that. Now, what is the whole purpose of doing an account pay check? An account pay check simply means whoever name is written on the check, the money will be transferred from the issuer of the check to that person's bank account whose name is given and a cross is put on the check. We will discuss about this in future, but I'm just giving an example. Now let's say it is an uncrossed check. By mistake, you forget to cross the check and you write on the check name of Mr. Mahesh. That is, you're issuing the check to Mahesh. So you should have crossed the check. That means the money will go from your bank account to Mr. Mahesh's bank account, and the money cannot be withdrawn. But let's say and you gave the check to Mr. Mahesh, and while Mr. Mahesh was going somewhere, he dropped the check. Okay, and he lost it. Then in that case, what happens? The person who has taken the check, because it is not crossed, he can go to the bank and remove the money, and he can encash the check for whatever amount you said it. Now, is he the bona fide holder of the check? Is he Mahesh? No, he's not Mahesh. He might be some XYZ. But does he obtain a good title on the check? No, he does not obtain a title on the check. But still, because the check was uncrossed, he was able to go to the bank and withdraw the money. So the holder's title should be free from defects. So in this case, Mr. X was not the rightful holder of the check, and his title was not clear or not absolute. Similarly, if the check was crossed, then XYZ could not have done anything normally. Okay, but there are other ways in which also frauds happen, which we will discuss further. But this simply means that the holder's title is free from defects, or it should be free from defects. Next, it can be transferred any number of times till its satisfaction. Okay, so like I told you, a negotiable instrument can be transferred from mere delivery from one person to the other, and also by endorsement and delivery. I told you the example of A to B and B to C. Similarly, it can go from C to D and D to E as many number of times as possible till the ultimate satisfaction. That means till the time the negotiable instrument is encashed. It can be transferred any number of times from one person to the other through the means of endorsement and delivery. Okay, you get that? So there is no restriction, but yes, finally once the negotiable instrument is encashed, then it cannot be transferred anymore. So this can be done any number of times. Okay, now the sixth point. Every negotiable instrument must contain either a promise or order to pay money. Also, the promise or order must be unconditional. Now, what do you mean by this statement? Please remember, it's very important point to know here. A negotiable instrument. See, I'm talking about a check again and again, not about bills of exchange and promissory note, because that's not something which we have incurred. At least not this generation has incurred in its daily life. We will talk about what a bill of exchange and what this thing promissory notice, but just for example and explanation purpose, I'm again and again using the name check so that you understand better. Now, the sixth point says every negotiable instrument must contain either a promise or order to pay money. Also, the promise or order must be unconditional. Now, what does this mean? When you let's say for example you issue a check to Mr. B as rent. Okay, the rent, and you're issuing the check on say on 1st of September, and the due date for you to pay the rent is 5th September. So one choice is you can give the check on 5th September itself or to the landlord, or one thing is you can issue a check on 1st September. Okay, now 1st September you can issue a check in two ways. Either you can put a 1st September date and pay the check, but the due date is on 5th September. So, or you can put a 5th September date and give the check on 1st September. Let's say the landlord has come to your house to collect it, and he says, okay, I've come now, so please give it to me. Otherwise, I'll have to come again for it. So in that case, you put a 5th September date on 1st September and you give him the check. Now in this case, please note there are two things that have happened. One thing is you've issued a negotiable instrument to your landlord, and next thing is it is not an order to pay money but a promise to pay money. So when do you promise to pay the money? You promise to pay the money on 5th of September, and when have you issued the check? You've issued the check on 1st September. So then it becomes a promise or promise to pay money. But in case it was you issued the check on 1st and the date on the check was 1st, that means it is an order to pay the money on 1st September, then it becomes an order to pay money. But if it is on 5th September or post-dated check, then it becomes a promise to pay the money. The legal obligations in both, whether it is an order or whether it's a promise, is the same, and the rights and responsibilities of the person issuing the negotiable instrument is the same. Okay, there is no difference in the case of a promise or an order to pay money. An order is immediate, whereas a promise is on a future date. Okay, so it can be immediate or future date. In the meantime, we have Khushi Sahu. Hi Khushi, how are you? Thanks for joining in. Okay, so Khushi, also do not forget to view the special classes on the Unacademy learning app to learn more and gain more information about the various subjects and topics of the CA Foundation and Intermediate course. Please go on to the Unacademy learning app and type in Prathik Gupta, Prathik Gupta, and please view all the special classes that are there, and also the special classes that I am going to take today and tomorrow on the YouTube, on the Unacademy platform as well. Thank you so much for your support. All right, so now let's go to the next point, the characteristics of promise in negotiable instruments. The promise or order to pay must consist of money only. Nothing should be payable, whether in addition or in substitution of money. Also, the sum payable must be certain. All right, now please remember, negotiable instruments will contain either an order or a promise to pay only money. Okay, this is only for money. Money means currency. Okay, so you cannot issue a check or a negotiable instruments for giving someone 100 kilos of mangoes or 100 watermelons or 100 kilos of tomatoes. You have to issue a negotiable instruments for money. So the order or the promise to pay something should be for money and nothing else. Okay, so that is one also the most important characteristic of a negotiable instrument. Please remember, today with the advent of currency and the trade becoming so popular, okay, everyone wants to earn money because money gives you the power to buy things and to transact. So everything and everyone buys or sell things for money, right? So a negotiable instrument also must consist of money only. Nothing should be payable whether in addition or in substitution of money. Also, the sum payable must be certain. So you cannot say in a negotiable instrument that please pay Mr. A some money on so and so date. So it has to be certain and it has to be definite what is the amount of money you're talking about. So the last point clearly says money and certainty. All right, this has to be there. So please take about 2 minutes, go through the essential characteristics of negotiable instruments which are applicable to all negotiable instruments, and then let's continue. Take about 2 minutes, go through this. In case you have any questions, please ask me. Please take about a minute more, go through the essential characteristics of all negotiable instruments, and then we continue. Take about a minute more. Let's proceed. Now we also come to the next important topic or next important discussion for Negotiable Instruments Act, that is the presumptions as to negotiable instruments. Presumption means there are certain things which we need to accept or take for granted for the applicability and operations of negotiable instruments. Okay, so let's look at these, and I request you all to carefully listen to this. Now, presumptions made in relation to the first column and the presumptions drawn. Okay, so first column gives you the items in relation to which the presumptions are made, and the second column gives you what are the presumptions made. So the first one, of consideration. All right, now what do you mean by consideration? If you go through my session on Indian Contracts Act 1872, which is also there as the form of special classes on the Unacademy learning app, okay, I have taken about 3 to 4 hours of session on the Indian Contracts Act 1872. So for the people who are studying the CA Foundation and Intermediate course and want to understand better what is the Indian Contracts Act 1872, I request you to go through my sessions, special classes on the Unacademy app in the name of Prathik Gupta, Prathik Gupta, and so that you will better understand what it is. One of the main essentials of a valid contract are the essential features of a valid contract are: there should be a valid offer and acceptance, there should be free consent, the lawful object. Then the third is there should be a lawful object, and then there is one more thing saying there should be a lawful consideration. So any contract for which there is where there is no consideration is normally an invalid or a void contract, subject to certain exceptions. There are about 3 or 4 points which are exceptions, which say that contracts can be made without consideration also. The examples are the contracts made out of love and affection, contract for a time-barred debt, contract for payment for necessities, and payments for acts not done gratuitously. So these are the 3 or 4 contracts which can be done without consideration, but normally most of the contracts should have a consideration. So consideration is very important. Now, what is the presumption in negotiable instruments in relation to consideration? The presumption is every negotiable instrument was made or drawn for consideration. That means every negotiable instrument was issued to someone because 2 people or more people have got into a contract, and for the enforceability of the contract there was consideration, and it has been issued only for that. Okay, so that is the first presumption for Negotiable Instruments Act in relation to consideration, that every Negotiable Instrument Act, whether a bill of exchange, a promissory note, or a check, has been issued to another person for consideration, as in exchange of consideration. Okay, the first one. Then, as to the date, every negotiable instrument bearing a date was made or drawn on such date. So if you mention any date on a negotiable instrument, it is presumed that the negotiable instrument was drawn by you or created by you on that date. So giving the example of earlier one, that on 1st September you give a check for 5th September, please remember, because you have mentioned the 5th September date, the person to whom you've given the check can present the check only on 5th September. He cannot present it before that, and that is why it is called a post-dated check. So when the person goes to the bank to present it on 5th September, it is presumed that that check was created or drawn on for 5th September and not before that. You might have issued it a month before 5th September, but the bank, for execution and honoring the negotiable instrument, will consider that the negotiable instrument was drawn out or drawn on such date, was made or drawn on such date. So the presumption as to date is every negotiable instrument bearing a date was made or drawn on such date. And also please remember, it is very important for you to mention the date on your negotiable instrument. Otherwise, the date can be entered by the holder of the instrument and the money can be removed before time or after time. That means before either the services or products are sold, and which may cause loss to you. The third presumption, as to the time of acceptance. Every accepted bill of exchange was accepted within a reasonable time after its date and before its maturity. So let's say you gave the bill of exchange or the check to B. A gave the bill of exchange or check to B, and B accepted it. So it is the clear presumption that the bill of exchange was accepted within reasonable time after its date and before its maturity. So if you have issued the check on 1st September to your landlord, it is presumed that he has received it well before its maturity. Okay, and he has received it within reasonable time. That is also the third presumption as to the time of the negotiable instrument. Fourth one, as to the time of transfer. Every transfer of a negotiable instrument was made before its maturity. So if the negotiable instrument is issued to you on 1st September, the check is issued to you on 1st September, it is easily assumed that the transfer of the negotiable instrument was made before its date of maturity. Now please remember, every negotiable instrument, or at least let's take a check for example, has a validity of 3 months from the date of its issue. Earlier it was six months, now it became 3 months. So let's say you issued a check on 1st September. So the validity of that check will be a period of 3 months. So that means September, October, November, till November 30th, the check is valid. And if the check is given to the bank for encashing after the 30th November, it will not be honored because the maturity period is over. So now the fourth presumption as to a negotiable instrument is as to the time of transfer. Every transfer of a negotiable instrument was made before its maturity. So even though the date of the check was 1st September, it is presumed that the check was handed over to the person or the bearer much before its maturity date of November 30th. If any check is being given after the maturity date, then it is invalid, as the check cannot be encashed or enforced. The fifth presumption is as to the order of endorsements. Endorsements appearing upon a negotiable instrument were made in the order in which they appear. So like I told you, there are various modes of delivery of a negotiable instrument. A negotiable instrument can be delivered by mere delivery as well as endorsement and delivery. And I gave you the example of A to B. When it's A to B, it is a mere delivery. When it is A to B and B in turn endorses it and delivers it to C, then it is endorsement and delivery. So whatever the order that of names of endorsements that is appearing in a negotiable instrument, please remember the endorsement is presumed to happen in that order. So if it is from A to B, B to C, C to D, D to E, that particular order of endorsement is always written on the negotiable instrument, and it is presumed that the endorsements were made in that order in which they appear thereon and not differently. All right. As to stamps, lost promissory note, bill of exchange or check was duly stamped. The next presumption as to negotiable instrument is that in case any promissory note or bill of exchange or check was lost, it was duly stamped or sealed and authenticated. Okay, it was not a waste document. It was a proper authentic document. And lastly, the presumption as to the holder of a negotiable instrument is a holder in due course. That means the person who's holding a negotiable instrument or to whom it has been issued, whether on delivery or on endorsement and delivery, is a holder in due course until and unless he goes and encashes the check, whether he takes the cash or he transfer it to his account. He will be considered as a holder in due course. So these are the 8 or 7 presumptions as to negotiable instruments, which are applicable to all negotiable instruments. So I request you to take 2 minutes, go through this and let me know in case you have any questions. Please go through this, take about 2 minutes, go through this. And also remember, these are the 7 presumptions or assumptions, and these are only rebuttable when there is evidence to the contrary. Okay, if the person can prove that none of these presumptions held good, only then can these presumptions be questioned, otherwise they hold good. Okay, the presumptions as to consideration, date, time of acceptance, time of transfer, order of endorsement, stamps, holder. Please take 2 minutes, go through this and let me know. Take about a minute more, go through this. Any questions, please ask me and then we proceed. Okay, now let's start off with the first negotiable instrument, that is a promissory note. So we'll now try and understand what do you mean by a promissory note. According to section 4 of the Negotiable Instruments Act 1881, a promissory note is an instrument in writing, not being a banknote or a currency note, containing an unconditional undertaking signed by the maker to pay a certain sum of money only to or to the order of a certain person or to the bearer of the instrument. Okay. The person who makes the promise is to pay is known as the maker. Here he is the debtor and must sign the instrument. The person who will get the money is a payee. Now, like the name says, a promissory note, according to section 4 of the Negotiable Instruments Act 1881, a promissory note is an instrument in writing. Please remember, it cannot be a verbal or an oral document. It has to be in writing, not being a banknote or a currency note. So it is not a currency. Okay, but it is an instrument in writing which containing an unconditional undertaking. So please note, there cannot be any conditions. It has to be an unconditional undertaking signed by the maker. The maker is the person who issues the promissory note to pay a certain sum of money only to or to the order of a certain person or to the bearer of the instrument. So the person making a promissory note, it's on a piece of paper, he says that I undertake so and so to pay Mr. B unconditionally a sum of money to Mr. B or to the order of Mr. B or to the bearer of this instrument. So it can be either Mr. B or the order of Mr. B or to the bearer of the instrument a certain sum of money unconditionally. The person who makes the promise is known as the maker. He is the debtor. A debtor is a person from whom you're supposed to receive money and must sign the instrument. The person who will get the money is called the payee. That means the person to whom the negotiable instrument or the promissory note is issued to is known as the payee, and the person who issues the negotiable instrument or promissory note is known as the maker. Alright, so the process goes like this. The maker of promissory note issues an undertaking in promissory note to pay the payee a certain sum of money. Please remember, this is unconditional, and it can be either paid to the payee or to the order of the payee or to the bearer of the, just one second. Okay, or to the bearer of the instrument. All right, please take about a minute or 30 seconds. Please go through this and then we proceed. Next, now we look at the essential characteristics of a promissory note. Earlier we saw the essential characteristics of negotiable instruments. Those are applicable to a promissory note as well, but we will also see the essential characteristics of a promissory note in particular as well. Firstly, in writing, an oral promise to pay is not sufficient. Like I told you, every negotiable instrument, be it a promissory note, be it a bill of exchange, or be it a check, has to be in writing. An oral promise to pay is not sufficient, so it has to be in writing. All right. Second one, there must be an express promise to pay. Mere acknowledgement of a debt is insufficient. That means the promissory note should specifically say that I promise to pay you so and so amount on so and so date. Unconditionally, it is not sufficient to say that yes, I owe you rupees 500. I agree, I owe you rupees 500. But all right, so I'm back. So sorry for the interruption now, and one second. Okay, so it should be an acknowledgement. It should be a promise to pay and not just an acknowledgement that okay, I owe you some money. Example, I acknowledge myself to be indebted. I acknowledge myself to be indebted to B in rupees 1000 to be paid on demand for value received. That is, it is a valid promissory note as the promise to pay is definite. Now, second example. Example, Mr. B, I owe you rupees 1000. Invalid promissory note as there is no promise to pay. It is just an acknowledgement of debt. So if you see the difference in the two. In the first one, he says, I owe you, I'm indebted to you for rupees 1000 and I promise to pay it to you on demand. So it is a valid promissory note. Whereas in the second case, it says, Mr. B, I owe you rupees 1000. This is an invalid promissory note as there is no promise to pay. It is just an acknowledgement of debt. So there has to be an express promise to pay. A mere acknowledgement of debt is insufficient. Then C, the promise to pay must be definite and unconditional. There should be no conditions attached to the payment. Therefore, instruments payable on performance or non-performance of a particular act or on the happening or non-happening of an event are not promissory notes. However, the promise to pay may be subject to a condition which according to the ordinary experience of mankind is bound to happen. Alright, so it should be a completely definite and unconditional promise to pay that yes, I will pay you this amount of money on so and so date, but it should not say subject to happening or non-happening of a particular event. Those are not promissory notes. Please take about a minute, go through this slide, and then we proceed. Please take about a minute. In case you have any questions, please ask me. And then we proceed. All right, we shall proceed now. Now, let's take another example. I promise to pay. I promise to pay. Where is the example? Okay. I promise to pay B rupees 500 7 days after my marriage with C. Now, this promissory note is invalid because as marriage with C may or may not happen. Alright, so please remember it should not contain any conditions or any uncertain event that may or may not happen. It should be absolutely unconditional and definite. So I promise to pay B rupees 500 7 days after my marriage with C. So what if the marriage with C does not happen? Then in that case, B will not get the money. So this is an invalid promissory note. The next example, I promise to pay B rupees 500 on D's death. As the death of D is certain, the promise is unconditional, hence the promissory note is valid. So, like we all know that death is certain, everyone has to die one day or the other. So, I promise to pay B rupees 500 on D's death. As the death of D is certain, the promise is unconditional and the promissory note is valid. The next example, I promise to pay B rupees 500 on D's death, provided D leaves me enough money to pay that sum. It is an invalid promissory note as the promise is dependent on D leaving behind money which is not certain. So D's death is certain, but D leaving behind money to a person to pay the money is an uncertain event, and that is the reason why this promissory note is invalid. So now we go to the fourth characteristic of a promissory note. A promissory note must be signed by the maker, otherwise it is incomplete and effective. Like we saw, any negotiable instrument should be authenticated and stamped. So stamped means signed. So a promissory note also must be signed by the maker, otherwise it is incomplete and ineffective. And there should be a promise to pay money only. There should not be a promise to pay anything or to barter goods or anything. It should be a promise to pay money. Example, I promise to pay B rupees 500 and to deliver to him my black horse on 1st January next. It is not a valid promissory note, as the promisor needs to deliver its black horse, which is not money. So like we spoke, the promissory note or negotiable instrument should only contain money. Alright, so in this case, he is also promising to give him his black horse, which is not a valid constituent of a negotiable instrument or a promissory note. So it is an invalid promissory note. Please take about a minute, go through these examples and ask me any questions you may have. Please take about a minute or two, go through this slide and ask me any questions you may have. Please note, it's very important for it to be signed, for it to have only money. It should have an unconditional promise, and it should have a promise to pay money and nothing else. These are the valid essentials or the valid essential contracts characteristics of a promissory note. Please take about a minute more, go through this. Please excuse my straight lines. I'm just underlining the important points. Okay, and the last one, it should have a promise to pay a certain sum. Example, I promise to pay B rupees 500 and all other sums which shall be due to him. Okay, so there is not a definite promise. Promissory note is invalid as the amount payable is not certain. You cannot say I pay him any sum or whatever sum or all the sum. If it is 500, it has to be rupees 500. It cannot be more or less than that. So in this case, it is invalid because he says other sums which shall be due to him. It becomes a general promise. Then the next characteristic of a promissory note is the maker and payee must be certain, definite and different persons. A promissory note cannot be made to the bearer. Only the Reserve Bank or the central government can issue or can make an issue a promissory note payable to the bearer. So unlike a check, a promissory note cannot be made payable to a bearer. That means whoever is holding the promissory note can take the payment. The promissory note has to be made to a definite and different persons. That means the person making the promissory note and the person receiving the promissory note should be different people. They should not be the same person. And unlike a check, a promissory note cannot be made payable to bearer. Okay, then stamping. A promissory note must be properly stamped in accordance with the provisions of the Indian Stamp Act, and such stamp must be duly cancelled by maker's signature or initials. Otherwise, unlike a check as well, a promissory note will have to bear Indian stamp duty as per the Indian Stamp Act, and the stamp must be duly cancelled by the maker's signature or initials. Therefore, based on the amount of the promissory note, it has to have a stamp duty paid, and the stamp duty sticker should be put on the promissory note and duly cancelled by the maker's signatures and initials on the above. Otherwise, it will be invalid. So, adequate stamp duty also has to be paid and it has to be endorsed by the stamp authorities. Please take about a minute, go through these last characteristics of a promissory note, and then we proceed. Please take about a minute, go through this, and then we proceed. Now, next we go on to the next negotiable instrument, that is a bill of exchange. Okay, a bill of exchange. We've discussed about promissory note so far. Now we'll talk about a bill of exchange. A bill of exchange is an instrument in writing containing an unconditional order signed by the maker directing a certain person to pay a certain sum of money only to or to the order of to a certain person or to the bearer of the instrument. Okay, so a bill of exchange can be made either payable to or to the order of a certain person or to the bearer of the instrument. Okay, now who are the parties of the bill of exchange? We have a drawer. The drawer is the person who makes the bill of exchange. We have a drawee on whom the bill of exchange is drawn. The person directed by the drawer to pay is called the drawee. He is a person on whom the bill is drawn. On acceptance of the bill, he is called the acceptor and is liable for the payment of the bill. His liability is primary and unconditional. Okay, so we have a drawer who makes the bill of exchange. On the person whom the bill of exchange is made, directing the certain sum of money to pay the amount, is called the drawee. And lastly, we have the payee. That is the person named in the instrument to whom or whose order the money is by the instrument directed to be paid. So we have three parties. One is the drawer of the instrument. The drawer makes the drawer makes the bill of exchange. Then we have the drawee, that is the person on whom the bill of exchange is made or who is directed to pay a certain sum of money to or to the order of another person or to the bearer of the instrument. And then we have the payee, who is the person to whom the payment is made or who gives the order to whom the payment is to be made, all right, or directed to be paid. So we have the flow goes like this. We have the drawer, then we have the drawee, and then we have the pay. So this is the way the flow goes for bill of exchange. All right, so the drawer is the person who makes the bill of exchange. He draws it on the person. So A draws a bill of exchange on B and directs B to pay rupees 500 to C or to whomever C orders it to be paid or to the bearer of the instrument. So let's say A is the drawer, B is the drawee, and C is the payee. So C is the ultimate beneficiary and A is the drawer of the bill of exchange. Please take about a minute, go through this, and then we proceed. Now we are talking about bills of exchange. Okay, just take your time, go through this. It's important for you to know who's a drawer, drawee, and payee. Go through this slide, take a minute, and then we proceed. Okay, let's proceed. Now let's discuss, like we discussed in the case of promissory note, the essential characters of the bill of exchange. Like we saw in the previous two others, it has to be in writing, not oral, verbal, or otherwise. It has to be in writing. The bill of exchange has to be writing so that it is legally enforceable. It must contain an express order to pay. So mere acknowledgement of debt. So mere acknowledgement of debt is not a valid bill of exchange. So it has to say that please I order so and so to pay so and so sum of money to C, or to the order of C, or to the bearer of the instrument. Just saying that yes, I owe C rupees 1,000 is not a valid bill of exchange. It must contain an express order to pay. The order must be definite and unconditional. The order to pay must be definite and unconditional. That means it cannot say that yes, I order A orders B to pay to C any amount if C does so and so work for B. Then that is not an unconditional and definite order, definite bill of exchange. It should be definite that please A orders B to pay 1,000 rupees to C, and or to the order of C, or to the holder of the instrument. So it has to be definite and unconditional. Only then it is a valid bill of exchange. The drawer must sign the instrument. Needless to say, to create a legal obligation, the drawer of the bill of exchange must sign the instrument. If it is not signed, it is not a valid bill of exchange. The next characteristic, the drawer, drawee, and payee must be certain. All these three parties may not necessarily be three different persons. One person can play the role of two. But if there are two distinct persons in any case, as per section 31 of the RBI 1934, a bill of exchange cannot be made payable to the bearer on demand. So, according to the RBI again, the bill of exchange cannot be made payable to a bearer on demand. So, it has to be issued to someone. Now, there are three parties to the bill of exchange. There is a drawer, there is a drawee, and there is a payee. So, these three people have to be certain. Okay, it cannot be an imaginary person or a non-living thing. It has to be a certain. Or so also the drawer and the payee can be the same. So any two people can be the same, but again it cannot be made payable to bearer on demand. So let's read it again. The drawer, drawee, and payee must be certain. All these three parties may not necessarily be three different persons. One can play the role of two, but there must be two different persons in any case. So the drawer and the drawee may be the same and the payee may be different, or the drawer and the payee may be the same and the drawee may be different. As per section 31 of the RBI Act 1934, a bill of exchange cannot be made payable to bearer on demand. Alright, the next one, the sum must be certain. You cannot say I order B to pay some sum of money to C whenever he wants. It has to be certain. That means it has to be specific and fixed. It cannot just be any random sum. The order must be an order to pay money only. You cannot have any other thing other than money. Nothing other than money, and it has to be money only. Okay, and then lastly, it has to be stamped based on the amount that is involved in the bill of exchange. It should be duly stamped, and the stamp should be cancelled by the signature of the drawer of the bill of exchange. So these are a few of the characteristics of the bill of exchange. I request you to take 2 minutes, go through all of them, and then we proceed. Any questions? Please ask me. Any questions? Please ask me. Okay, now we again look at the differences between a promissory note and a bill of exchange. This is an important slide. We have discussed it so far. Now let's look at the differences between a promissory note and a bill of exchange. Firstly, in terms of definition, a promissory note is an instrument in writing, not being a banknote or a currency note, containing an unconditional undertaking signed by the maker to make a certain sum of money, to pay a certain sum of money only to or to the order of a certain person or to the bearer of the instrument. Okay? Whereas a bill of exchange is an instrument in writing containing an unconditional order signed by the maker directing a certain person to pay a certain sum of money only to or to the order of a certain person or to the bearer of the instrument. So the first difference that you see in both is in terms of the definition. Promissory note is an instrument. Yes, it is an instrument which contains an unconditional undertaking. So both of them are same till there. Now the first one is who makes the promissory note is known as a maker, but a person who makes a bills of exchange is known as a drawer. Okay, promissory note contains an unconditional undertaking made by the maker to pay a certain sum of money only to or to the order of a certain person or to the bearer of the instrument. But if you see the bill of exchange, firstly the maker of the bill of exchange is a drawer, then he draws it on a person called a drawee, directing the drawee to make a payment of a certain sum of money only to or to the order of a certain person or to the bearer of the instrument who is known as a payee. So in the first case there are two parties involved. In a bill of exchange there are three parties involved, that is a drawer, drawee and payee. But in a promissory note it is only maker and a payee. Alright, now come to the second part of the difference, nature of the instrument. In a promissory note there is a promise to pay money, but in a bill of exchange there is an order to pay money. So in a promissory note, the maker of the promissory note promises to pay that money to a certain someone or to the order of the certain someone or to the bearer of the instrument. Okay, now whereas the bill of exchange is an order for another person to pay a certain sum of money to a third person or to the order of the third person or to the bearer of the instrument. Alright, so how it goes, in a promissory note the maker promises to pay the payee, but in a bill of exchange the drawer draws it on the drawee and the drawee is directed to make a certain payment to a certain person or to the order of the person. Alright, and now we come to the third difference, that is the parties. Parties in a promissory note there are only two parties, namely the maker and the makee and the payee. And in a bill of exchange there are three parties, which are the drawer, drawee and the payee. We have discussed this. Just one second. And the fourth difference is acceptance. A promissory note does not require any acceptance and is signed by the person who is liable to pay. The bill of exchange needs an acceptance from the drawee. Okay, so like we discussed, the promissory note is a promise made by the maker to pay a payee. So it has to be signed by the maker of the promissory note. But whereas a bill of exchange has to be accepted by the drawee on whom the bill of exchange is issued, ordering him to pay a certain sum of money to a certain someone or to the order of another person. So these are the four major differences of a promissory note and a bill of exchange. So I request you to take about 2 minutes, go through this carefully, and then we proceed. Any questions? Please ask me. Please take about another 2 minutes. This is an important question from the exam point of view as well. Please take your time, go through this, and any questions, please ask me. Okay, now let's look at the last part of the Negotiable Instrument Act, or the next instrument of the Negotiable Instrument Act, that is the check, which all of us should be familiar, as we have heard this and seen this day in and day out, as we've received a check or we've paid a check to someone or the other. And so it will be easy for us, much easier than a bill of exchange or a promissory note, to comprehend and relate to this negotiable instrument. So let's start off. A check is a bill of exchange drawn on a specified banker and not expressed to be payable otherwise than on demand, and it includes the electronic image of a truncated check and a check in electronic form. So a check is a bill of exchange which is drawn on a specified bank, that is whichever bank you hold an account on, and not expressed to be payable otherwise than on demand. So please remember, the payment on a check has to be made only on demand and not otherwise than on demand, and it includes the electronic image of a truncated check and a check in the electronic form. So what happens once you issue a check to someone? The check goes to your bank, then there is an electronic image that is captured of the check and sent to the bank of the person to whom the check has been issued, and then the check is cleared. So the essential characteristics of the check from this you see is, it is a bill of exchange, it is drawn on a specified banker, and it is not expressed to be payable otherwise than on demand. So that means it has to be demanded, and it includes an electronic image of a truncated check and a check in the electronic form. So a check is a bill of exchange drawn on a specified banker which is payable on demand. Payable on demand means it should be payable whenever the holder chooses it to present it to the bank. So let's say if you issued a check to someone for September 5th, 2020, the validity of the check is 3 months from the date of issue. So within that 3 months, whenever the person to whom you have issued the check decides to get the payment or presents it to his bank to get the payment, it should be paid only then. If he carries the check in his pocket, there should be no payment made, or there cannot be any payment made. The expression banker includes any person acting as a banker and any post office, savings bank. So today we have numerous banks, we have hundreds of banks. So wherever you hold an account, and if you have issued a check on that bank, then the banker will be the bank on which you have issued the check. Please take 2 minutes, go through this slide, and then we proceed. Please take about a minute more, go through this. And then we proceed. Okay, next, for the purpose of this section, the expressions, a check in electronic form means a check drawn in electronic form by using a computer resource and signed in a secure system with a digital signature, with or without biometric signature, and a asymmetric crypto system or electronic signature, as the case may be. So A check is issued, normally what we do is we issue the check in the physical form, but when it goes to your bank for clearance, they may create an electronic image of this and they transcript it further to the bank on or the customer, or the bank of the customer on whom the check is issued. Alright, so for the purpose of this section, the expressions asymmetric crypto system, computer resource, digital signature, electronic form, and electronic signature shall have the same meaning respectively assigned to them in the Information Technology Act 2000. So the Information Technology Act 2000 has certain definitions of asymmetric crypto system, computer resource, digital signature, electronic form, electronic signature, and it will be the same meanings as per the Information Technology Act 2000 definitions given there. A truncated check means a check which is truncated during the course of a clearing cycle, either by the clearing house or by the bank, whether paying or receiving amount immediately on generation of an electronic image for transmission substitution. So like I told you, whenever you issue a check to the bank, let's say you issue a check to your landlord to pay rent on September 5th and for rupees 5,000. So he immediately goes and he presents the check in his bank. Let's say your bank is ICICI Bank and your landlord's bank is HDFC Bank. So he goes, so you issue the check on ICICI Bank and you give it to him for 5,000 rupees 5th September to your landlord, Mr. A, who has an account in HDFC Bank. So what he does immediately, Mr. A goes to his bank, HDFC Bank, puts in his name, his account number, his mobile number, everything, and he drops it there. So he deposits the check in his bank. So what his bank does, the bank immediately takes the check, takes an electronic image of the check, scans it, and then truncates or transfers that electronic image to the bank of ICICI, which is your bank, and requests for payment based on that check. What ICICI Bank does is it checks if all the particulars of the check are good, the amount is there in your account, the date is correct, the wordings are correct, the party's name is correct, it is cross-checked, the check is crossed, and your signature is as per the signature in their records. If every detail is correct, then ICICI Bank transfer the money from your account to the account of the person, that is your landlord, which is held in HDFC Bank. So this is known as the truncation of the check. Okay, and then while the transfer happens, it is all done through various asymmetric and crypto and transcription, which is defined under the Information Technology Act 2000. A truncated check. So I've also explained to you what a truncated check means. Please take about 2 minutes, go through this slide carefully, and then we proceed. Take your time, go through this, and then we proceed. Any questions, please ask. Okay, now we look at the explanation 2. For the purpose of this section, the expression clearinghouse means the clearinghouse managed by the Reserve Bank of India or a clearinghouse recognized by any such Reserve Bank of India. So clearinghouses are specific to each bank. So for example, ICICI will have a clearinghouse, HDFC will have a clearinghouse where all the checks that are issued or received are sent for clearing, where the electronic image is generated and then it is sent to the other bank from where money is to be received or money is to be paid. So those are known as clearing houses. Then we look at explanation 3. For the purpose of this section, the expressions again, asymmetric crypto system, computer resource, digital signature, electronic form, and electronic signature shall have the same meanings respectively assigned to them in the Information Technology Act 2000. We also saw this in the previous slide. So the terms asymmetric crypto system, computer resource, digital signature, electronic form, electronic signature shall have the same meanings respectively assigned to them in Information Technology Act 2000. Okay, a combined reading of section 5 and 6 tells us that a bill of exchange is a negotiable instrument in writing containing an instruction to a third party to pay a stated sum of money at a designated future date or demand, whereas a check is also a bill of exchange, but it is drawn on a banker and payable on demand. So the basic difference between a bill of exchange and check is a bill of exchange is drawn on a third party, directing him to make a payment to another person, which is payable on demand or a future date. But a check is drawn not on a third party, but it is drawn on a banker, and it is always payable on demand. It is not automatically payable on a particular date, like how a bill of exchange works. So this is the difference between a bill of exchange as well as a check. Please take about a minute, go through this slide, and then we proceed. Please take your time, take about a minute more, go through this, and ask me any questions you have. Now, parties to a check, please pay attention to this. Check is what we encounter almost on a daily basis, or with the advent of internet banking, mobile banking, maybe it's not so common now, but still we all have encountered check somewhere or later. A drawer, the person who draws the check, that is the makes the check is the thing, his liability is primary and conditional. So whoever makes the check is known as a maker of the check. He is the debtor whose liability is primary and conditional. So if you are making a check to your landlord, you are the drawer of the check. That means you are drawing the check to the landlord and you owe money to the landlord. Drawee, the specific bank on whom the check is drawn is known as the drawee. So in case your bank account is an ICICI bank, then ICICI bank will become the drawee because you're issuing the check on ICICI bank. All right, he makes the payment of the check. In case of the check, drawee is always the banker. So your bank, that is ICICI bank, always makes the payment on your behalf. Drawee in case of need, when in the bill or in any endorsement thereon the name of any person is given, in addition to the drawee to be resorted to in case of need of such person, is known as drawee in case of need. Okay, then we have the payee, the person named in the instrument, that is the person in whose favor the check is issued, to whom or to whose order the money is by the instrument directed to be paid, is called as the payee. The payee must be maybe the drawer himself or a third party. Okay, so now let's say you've issued the check to your landlord. So your landlord will become the payee. That means the person to whom the check is given or issued to. So the three parties to a check will be a drawer. That means you have issued the check. All right. You have issued the check. Your bank will be the drawee, which is supposed to make the payment. And the person to whom the payment is supposed to go, that is your landlord, will be the payee. So this is how the process of a check follows. There is a drawer, there is a bank, and then there is a payee. So these are the parties to a check. Please take about a minute, go through this, and then we proceed. Any questions? Please ask. Take about a minute, go through this, and then we proceed. Now we come to again the essential characteristics of a check. We've also seen the essential characteristics of negotiable instruments. We've seen the essential characteristics of a promissory note. We've seen the essential characteristics of a bill of exchange. Now accordingly, we will also see the essential characteristics of a check. According to the definition of check under section 6 of the Negotiable Instruments Act 1881, a check is a species of bill of exchange. That means it is common or it is similar to a bill of exchange. Thus, it should fulfill the following conditions. All the essential characteristics of a bill of exchange. Because it is also another form of a bill of exchange, it should fulfill all the essential characteristics of a bill of exchange. Now, what were the essential characteristics of a bill of exchange? It must be in writing. That means it should not be oral, verbal, or otherwise. It has to be in writing. It must contain an express order to pay. Mere acknowledgement of debt is not a valid bill of exchange. So again, a check must also contain an express order to pay someone or to the order of certain someone. Okay, the order must be definite and unconditional. Now in a check, you cannot say please pay B rupees 500 if he comes home and collects the check. It should be unconditional, and also it should be definite. It should not be that pay Mr. B a certain sum of money or some money, okay, on so and so date. Whatever is the amount, it has to be mentioned. The drawer of the instrument must sign the instrument. The drawer, the drawee, and the payee must be certain. And in this case, the drawer and the payee may be the same. Like a bill of exchange, even in the case of a check, the drawer and the payee might be the same. The only difference is in case of a bill of exchange, the drawee is another person. But in the case of a check, the drawee is always the bank of the person making the check. The sum must be certain. You need to enter a specified sum. You cannot say some sum or any sum, and the order must be to pay money only. That means the check should be issued only for money terms. It should not be for any other denomination or any other item, and it must be stamped. Now stamping in a check may be not necessary. Okay, so then these are the characteristics of a check. Firstly, all the essential characteristics of bill of exchange that we just saw. Then B, it must be drawn on a specified banker. So the difference, like I told you, a bill of exchange is drawn on a drawee, that is the third person. But in case of a drawee, in case of a check, will always be a banker. The bank in which the maker of the check or drawer of the check holds an account. And it must be payable on demand. So unlike a bill of exchange which is payable on a specified date, a check is a bill of exchange which is payable on demand only. That means to the person to whom you have issued the check should go and demand money for that check, and only then it can be honored, and it should be done within the validity period of the check. Acceptance. The acceptance of a bill is an indication by the drawee of his assent to the order of the drawer. Section 7 states that an acceptance is the signature of the drawee of the bill who has signed his assent upon the bill and delivering it. So please remember, in case of bill of exchange, the drawee is a third person who is ordered to pay money to another person. But in case of a check, the drawee is a bank, and once the drawee accepts it, that is the bank or the third person accepts that, okay, I have to pay money to this thing, it is said to be acceptance on behalf of the drawee. Okay, please take about a minute, go through this, and then we proceed. Take about a minute, go through this, and then we proceed. Then we see the acceptor. Now, acceptor is a person after the drawee of the bill has signed his assent upon the bill. or if there are more parts thereof than one, upon each of such parts, and delivered the same or given notice of such signing to the holder or to some person on behalf, he is known as the acceptor. Okay, thus the acceptor is the drawee who has signed his assent upon the bill and delivered it to the holder. So once you issue a check on your bank and say that the payment has to be made to your landlord after 2 days or 3 days, and whenever the landlord presents the check to your bank, to his bank, and his bank takes the electronic image of the check and truncates it to your bank, that is ICICI Bank, and ICICI Bank checks everything, that is the name, the date, the amount, signature, there is no mismatch, and if the check is valid, then it accepts its responsibility to pay the amount to the payee's bank on your behalf. Thus, an acceptor is the drawee who has signed his assent upon the bill and delivered it to the bank, delivered it to the holder. Alright, so once your bank accepts that, okay, everything is okay in the check and I will transfer the money from your account to your landlord's account, your banker is known as the acceptor. Acceptor for honor. When a bill of exchange has been dishonored by non-acceptance and any person accepts it for the honor of the drawer or for its endorsers, it is known as acceptance of honor. So firstly, once the check comes to your bank, let's say when HDFC Bank or the bank of your landlord takes the image of the check and sends it electronically to your bank, which is ICICI. ICICI checks everything, whether the name of the person, the date, the amount, the signature, everything is matching. Just in case any of the things in a valid bill of exchange or check is not matching, then it can dishonor the bill of exchange. Now it has dishonored the bill of exchange, but please remember, dishonor of bill of exchange is quite a serious issue. It also hampers the reputation and image of a person who has issued the check, and it could be dishonored for any reason. And if it is dishonored for insufficiency of funds, then it is even more embarrassing. So in such case, when a bill of exchange has been dishonored by non-acceptance and any person accepts it for the honor of the drawer or the endorsers, it is known as acceptance of honor. So just to keep the image or the honor of the person who's drawing it, if any person accepts that bill of exchange, it is known as acceptance for honor. The payment which he makes is known as payment for honor. In other words, it is an undertaking by a third party to accept and pay the bill of exchange that was dishonored, either by non-acceptance, see dishonor by non-acceptance, or by non-payment, see dishonor by non-payment, by the party on whom it was drawn. It is also known as acceptance supra protest. So it simply means when your bank dishonors your check, just to keep your image, if another third person accepts and honors that bill of exchange, it is known as acceptance for honor, and that particular thing is known as acceptance supra protest. How acceptance for honor must be made? A person desiring to accept for honor must, by writing on the bill under his hand, declare that he accepts under protest the protested bill for the honor of the drawer or a particular endorser whom he names, or generally for the honor. Alright, so please take about a minute, go through this and let me know if you have any questions. This may not be a very regular feature, but yeah, there are certain instances where it happens. Not a very regular feature in today's times. Please take about a minute. Essentials of a valid acceptance for honor. Now we've seen essentials of a negotiable instrument, essentials of promissory note, and we've seen essentials of bill of exchange as well as essentials of a check. Now let's look at essentials of a valid acceptance of honor. The holder must consent to acceptance of honor. The holder cannot be compelled to assent to acceptance for honor. That means whoever is the holder of the instrument must accept the acceptance for honor, and he cannot be forced to accept it. The bill must have been noted or protested for non-acceptance of a better security. So the bill of exchange should have been rejected by the drawer for some reason, and it should be protested. That means the person who has made the instrument or the drawer of the instrument should have protested against it and said that no, my instrument is right and you cannot dishonor it. But still the drawee refuses to honor the instrument. In that case, you can go for a acceptance of honor. The acceptance of honor can be made by a person who is not already liable on the bill. Drawee of the bill, when he refuses to accept the bill, becomes a stranger. He may therefore accept the bill of honor for the party thereto. That means whoever is accepting the bill for honor should not be a party to the contract. He should be a stranger to the contract. So once a drawee of the bill refuses to accept the bill, he becomes a stranger. Therefore, he may accept the bill for honor of the party and thereto. Alright? Then it must be made by the writer on the bill. It must be made by writing on the bill. Now, whoever accepts the bill of exchange for honor, he should write it on top of the bill that he is made it so by writing. So like every Negotiable Instrument Act, this should also be in writing. It must be for the whole amount due on the bill. So whatever is the amount for which the bill of exchange was drawn, the acceptance for honor should be for the complete amount and not for a part amount. The acceptance must be for the honor of any party already liable on the bill. So it must be for the honor of the drawer of the bill. So he is liable to pay the amount, and so the acceptance for honor should be made on his behalf. All right. So acceptance for honor must be for before the bill is overdue. Now let's say the bill of exchange is issued for the next week, and within the next 2 days the drawee rejects it due to some reason, and then you protest on the bill of exchange. In this case, the acceptance for honor of that bill of exchange should be done before the bill is overdue. That means before the end of next week, that before the due date, the acceptance of the acceptance for honor of the bill of exchange should be done. Okay, a stranger paying for honor must make payment, declare before a notary public the party for whose honor he pays, and the notary public must have recorded such a declaration. So if all these 8 conditions are fulfilled, then a valid acceptance of honor of a bill of exchange is said to have been made. Please take 2 minutes, go through this, and then we proceed. Okay, please read the 8 points, essentials of a valid acceptance of honor, and then we proceed. It's all are very important points. You need to know the concept. So please go through these points and then we proceed. Take about 30 seconds more. Okay, now let's look at the rights and liabilities of the acceptance of honor. Acceptance for honor binds himself to all the subsequent parties to pay the amount of the bill if the drawee does not pay. So as we saw that the acceptor for honor is the person who accepts a bill of exchange for the honor of the drawer of the bill of exchange when the drawee refuses to pay it, and the drawer protests with the drawee that, okay, why have you done it? And the drawee says, no, this is not right, I'm not accepting a bill of exchange. Then, in order to save the honor of the drawer of the bill of exchange, another party comes and accepts it, and that person is known as the acceptance for honor. So once an acceptor for honor binds himself or accepts it, he binds himself to all the subsequent parties to pay the amount of the bill if the drawee does not pay. All right. The party for whose honor he accepts to pay the amount, that is the drawer of the bill of exchange, and all the price parties are liable to compensate the acceptor for honor for all the loss or damage sustained by him in consequence of such acceptance. The liability of an acceptor of honor is conditional. He is liable only if the drawee fails to pay the bill. All right. So now let's say a drawer drew a bill of exchange and he sent it to the drawee, and the drawee refused to accept it. So in this case, to save the honor of the drawer of the bill of exchange, the acceptor for honor stepped in and he accepted the bill of exchange. Now, due to the consequence of accepting such a bill of exchange, if the acceptor for honor undergoes any losses or any damages due to the drawee fails to pay the bill, in that case, it shall be the duty of the drawer of the bill of exchange to compensate the acceptor for honor for all the losses and damages faced by him. The bill of exchange should be presented at its maturity to the drawer for payment, and it must be dishonored by the drawer and noted or protested for non-payment. To charge an acceptor for honor, the bill must be presented or forwarded or presented to the drawee not later than the next day after its maturity. So whenever that bill of exchange is presented by the acceptor for honor, he should present it to the drawee, and the drawee should reject it or not honor it. In that case, the acceptor for honor can go back to the drawer of the instrument and take compensation for this. All right, please take about 2 minutes, go through this slide, and then we proceed. This specimen is not there, so you can just ignore this. Remaining, just go through this, take 2 minutes, and then we proceed. Please go through this. Okay, let me know once you're done with this. Okay, so with this we would like to end today's session, but before I can end the session, I would like to bring to your attention certain matters which I explained in the beginning of the session and which are ultimately going to benefit you. We spoke about, this was a brief background about me, so you can, I also, like I said, I do take a lot of special classes on the platform of Unacademy for the benefit of CA Foundation and intermediate students. I request you to download the Unacademy learning app and register on it using your mobile number and OTP, and please access those special classes that I have conducted and put up there. And I will be taking a lot more special classes in the future as well. You need to look me up with the name Prathik Gupta, Prathik Gupta, on the Unacademy learning app. and you will find all my special classes that I have taken so far, and also I will be taking in future as well. So once you register there and follow my profile, you will get real-time notifications about the timings and topics of my session. So I request all of you to please go and view all my special classes on the Unacademy app and benefit from it. And in case you have any questions or doubts, please feel free to ask me. All right. And then, like I told you about the Plus platform of Unacademy, which is a payment-based subscription model of Unacademy and provides you various packages for the CA Foundation and Intermediate courses. More information on that will be provided in the following slides. I'd like to reiterate and repeat that the Plus platform is highly recommended and encouraged to you because of the following reasons. It provides daily live classes where you get to chat with your educator, engage in discussions, ask your doubts and answer polls all while the class is going on. You also get to attend live tests and quizzes which are conducted by the Plus platform of Unacademy, where you get to evaluate your preparation with the regular mock tests and quizzes and get detailed analysis of your performance, and also helping you identify your weak areas, your not so strong areas and your strong areas, so that you can channelize and divert your time effectively, spending more time on your weak areas, a little lesser time on your not so strong areas, and less time on your strong areas. The courses provided by the Plus platform of Unacademy are structured courses. We call them structured courses because they are in line completely with your exam syllabus and help you best prepare for it. So once you are done a particular course on the Plus platform of Unacademy, you can be assured that you finished the entire syllabus of your examination without missing on any important point or topic. All right, and that's why the courses provided by the Unacademy, the Plus platform of Unacademy, are structured courses. And lastly, and most importantly, the one subscription to the Plus platform of Unacademy gives you access to all the live and recorded courses to watch from the comfort of any devices, maybe a desktop, laptop, tablet, or mobile phone. And the best part, better part, is that you can access it from any location you are and at any point in time. All you require is a good internet connection or a data plan, which is present with most of us today. This generation is blessed with that. So you can make use of that and minimize the wastage of time and maximize the utilization of your time in accessing the Plus platform of Unacademy and enhancing and accelerating your preparation for the CA Foundation and Intermediate examinations. So I strongly recommend you to get onto the Plus platform of Unacademy and use it to prepare for your CA Foundation and Intermediate examinations better. For those of you who have downloaded the Unacademy Learning app and are using it, I thank you very much for your support. Please continue your support with us. For those of you who have not downloaded the Unacademy Learning app yet, I request you to go to your Play Store, download the Unacademy Learning app, put in your mobile number and the OTP sent on your mobile number and register on it. And then what it does, it opens your gateway to the world of courses, resources, content, live and recorded videos of your favorite educator, your topics of your choice, and all this can be accessed at any point in time, at any place, be it when you're on a holiday, be it when you're on a taxi, be it when you're in a bus, or be it when you're waiting for someone. You can just plug in your headphones onto your mobile phones and access that information and make use of it. And also this is the place where you will find all my special classes that I've taken so far on the Unacademy platform. You can go to this Unacademy Learning app and type in Prathik Gupta. That is me, and you can access all the special classes that I've taken so far, and you will also get access to whatever special classes I'm going to take in future. All right, so I hope you join me there and view all my special classes and benefit from it at the earliest and start using the Unacademy Learning app. And like I told you about the various packages provided for the CA Foundation and Intermediate subscription under the Plus platform of Unacademy are as follows. The packages provided are for 1 month, 3 months, 6 months, 12 months and 24 months. The 1 month package ordinarily costs you rupees 3,500. The 3 month package costs you rupees 8,750. The 6 month package costs you rupees 14,000. The 12 month package costs you rupees 17,500. And the 24 months package costs you rupees 21,000. While you choose or decide the package of your choice, please do not forget to use the code Prathik, PRATHIK, to get a discount of 10% on your listed price. So the after discount price of each package becomes: the 1 month package will cost you rupees 3,150. The 3 month package will cost you rupees 7,875. The 6-month package will cost you rupees 12,600. The 12-month package will cost you rupees 15,750, and the 24 months package will cost you rupees 18,900. Having said this, while you're free to choose the package of your choice, I would personally recommend you to go for the 12 months package or the 24 months package, and I'm recommending this due to the following reasons. Now, firstly, it is cost effective. If you see the per month cost of the 1-month package and compare it with the per month cost of the 12 months and 24 months package, it's almost less than 1/3 of the per month cost. So it brings you great savings immediately. And secondly, and most importantly, as the CA foundation and the intermediate subscription is being provided to you in one package, it normally takes about a year's time for you to prepare and clear the foundation and the intermediate examinations. So it makes sense for you to go for the 12-month package at least, to get a very cost-effective solution for the entire duration of your CA foundation and intermediate subscription. Having said this, you are free to go for whatever duration you want, that is 1 month, 3 months, 6 months, 12 months, or 24 months. But please do not forget to use the code Prathik when you're making a choice to get a discount of 10% on the subscription on the listed price immediately. So that will get you an immediate savings of 10%. And please, I request you to come on board the Plus platform as soon as possible and take advantage of the various opportunities and privileges that are being offered there to enhance and accelerate your preparation for the CA foundation and intermediate course. So I look forward to seeing all of you there. Thank you so much for the patient listening today, and thanks so much for being a wonderful audience. And I will see you around soon with more sessions on YouTube and special classes on the Unacademy Learning app, which I encourage you to join and give your comments and ask me any questions you may have. Thank you so much. This is Prathik Gupta signing off. Have a good day.